The UK is experiencing a shocking surge in tax liabilities that is hitting pensioners hard, and it's time to wake up and take notice. Recent data released by HMRC indicates that a staggering 1.32 million simple tax assessments have been dispatched in the 2023-24 tax year, a jaw-dropping 74% increase from last year's figures. This is not just a minor uptick, it's the highest number recorded, far surpassing the annual averages seen over the last 6 years. Many retirees are being caught off guard and are now facing tax bills they never anticipated. So, what's behind this alarming trend? It all boils down to the government's relentless freeze on income tax thresholds, a policy that has been in effect since 2022 and shows no signs of changing until at least 2028. With inflation rising and incomes gradually increasing, these static thresholds are ensnaring more pensioners into the tax net. The state pension, bolstered by the triple lock mechanism, is increasing, but this growth is pushing many retirees above the £12,570 tax-free personal allowance. To complicate matters further, most pensioners supplement their state pension with private pensions or savings income, which increases their taxable income. The real kicker? The state pension is paid out without any tax deductions at source. This means that many retirees may not even realize they owe tax until they receive a bill from HMRC, catching them completely off guard. The simple assessment system was designed to simplify the tax collection process, but for many pensioners, receiving that unexpected notice in the mail can be utterly terrifying. Former Pensions Minister Steve Webb has raised alarms about this situation, noting that countless pensioners who thought they were done with HMRC are now receiving these simple assessments. Many pensioners on modest incomes believe they had moved past the days of dealing with tax issues, but the freeze in tax thresholds has flipped that narrative on its head. While not all pensioners need to file a complete tax return, the increasing frequency of these HMRC demands is alarming and catching many off guard. The frustration is palpable. Pensioners often struggle to get clear answers from HMRC, where call wait times are notoriously long and navigating online systems can be daunting. Those who lack internet access or digital skills may feel utterly helpless when trying to tackle tax problems. John Greer, head of retirement policy at Quilter, has pointed out that this is a case of fiscal drag, where pensioners are dragged into higher tax brackets due to frozen thresholds rather than genuine increases in income. Millions are unwittingly stepping into the tax system, unaware of their liabilities until that dreaded letter from HMRC arrives. Historical data paints a stark picture. In the 2017-18 tax year, HMRC issued 486,340 simple assessments. That number surged to 711,390 in 2018-19, dipped slightly in subsequent years, and then shot back up to the current figure of 1.32 million. This trend is not slowing down, and as long as the government maintains the freeze on tax thresholds while state pensions continue to climb, more pensioners will find themselves ensnared in this tax trap. The Treasury defends the policy, claiming that simple assessments allow for straightforward tax collection without the need for full tax returns. However, many critics argue that this process is neither simple nor fair. Pensioners often do not grasp how their income has suddenly led to tax liabilities, and poor communication only exacerbates the confusion. For instance, someone receiving the full state pension of around £10,600 annually, paired with a small private pension, could easily find themselves over the tax threshold without any automatic tax deductions. This sets the stage for HMRC to swoop in post factum with a simple assessment and a bill. Calls for reform are growing louder. Steve Webb has advocated for a comprehensive review of the system to enhance transparency and make it easier for pensioners to navigate. Experts agree that the current situation is not only causing undue stress for older individuals but also eroding trust in the tax system itself. It's particularly concerning because many of those affected have done nothing wrong, they've simply followed the rules and expected a peaceful retirement. If you find yourself on the receiving end of an unexpected tax bill from HMRC, don't panic. Ignoring it is not an option. Experts advise pensioners to respond quickly. If the bill is unclear or seems incorrect, reach out to HMRC without delay. Yes, it might take time to get through, but addressing the issue early is crucial to avoid escalation. Seeking guidance from a financial advisor or pension service can also help clarify how your income streams interact. This situation serves as a stark reminder that financial planning and tax awareness are essential, even in retirement. The days of assuming a modest pension means zero tax responsibility are over for many. With the state pension rising and tax thresholds frozen, more retirees are being thrust into the tax system without warning. It's vital to remain informed about your income and tax status. If this information has shed light on a complex issue or provided insight into the evolving UK tax landscape, consider sharing it. Stay updated on critical financial news and practical tips to safeguard your money. Together, we can navigate these changes and make sense of the system.